Hey everyone, welcome back to my channel. In this video, I'm going to touch on something that I made in a video a few weeks ago, and that's talking about how home prices and rental prices are going to be affecting the CPI. And the reason why I'm revisiting this is because I had told you in that previous video, and I'll post a link to it in my description, about how rising home prices will eventually force up the rents and the prices of owner's equivalent rent, as well as other shelter prices in the coming months. And typically speaking, there's about a year and a half lag, okay? So I created a sort of table showing the past instances where home price inflation peaked as measured by the Shiller Home Price Index, and took the annual inflation rate peaks and then tabled out, their effects on total shelter inflation, okay? So in this case, what they did is that it would change the original inflation rate. That was when the home price would peak, and then about a year and a half later or so, it would raise it up to a new inflation rate for shelter. And it was pretty consistent. I was able to run just a simple linear regression analysis, and it holds up pretty well on predicting the effect that home prices will have on shelter prices, especially in terms of inflation rates. And the thing is that we just got out the May home price index numbers for Shiller, okay? And so I'm going to pull that up into a chart right quick, but essentially speaking, the rates have become so high for the home prices now that they are going to permanently increase the inflation rate until the housing bubble pops, okay? So they've reached an annual rate of 16.6% as of May 2021. Now, to put things in perspective, that's the highest annual rate we've ever had on record, okay? So it tops off and beats the housing bubble of 2005's record of 14.3%. And although the housing bubble, lasted for quite a while here, okay, the bubble really began in the late 90s and 2000s as high stock prices funneled into higher home price valuations. And then when the Fed lowered rates from 5% to 1% on the Fed funds rate, it just caused those home prices to explode in price. We are seeing a much sharper increase now, and I suspect that this increase is not finished yet. Those home prices are still going to go up as record low interest rates combined with new cash entering the markets has created unprecedented demand. And then there's been the restrictions of inventory on housing, with the pandemic shutdowns complicating matters. And the two together are squeezing these prices up into a huge jump that we have never seen before since Shiller has really been documenting these changes for the past 30 years or so. So this is truly amazing, but not amazing in the good way. It's amazing in the bad way about what's going to happen to our prices. In any case, one of the alarming things that I noted is that trending it out to June 2021, so just pushing it out to 1 month ahead of time, shows that the annual inflation rate for the housing prices by Shiller is going to reach around 18%, about 18.3, okay? And when you run a standard linear regression analysis, it'll eventually, in about a year and a half later, so December 2022, it's going to push up your shelter inflation component of the CPI to about 5.8%, okay? It's going to push it up 3.2% higher than the base, and the base was at 2.6%. So, shelter inflation was already beginning to increase because of rising housing prices, and now it's going to push it up even further. And that's going to translate into a permanent CPI, okay? So if prices were flat in everything but shelter, it's going to make the CPI's minimum base be 2%, okay? What that means is that if we had no food inflation, no energy inflation, no inflation of any kind of prices, no medical care inflation, no inflation in clothes or apparel or transportation or any of the other items, then at minimum our CPI is still going to be 2% by the end of 2022. So guess what, ladies and gentlemen? We're not going back down to 2% price inflation anytime soon. Not until this housing bubble peaks and then burst, okay? Now, when that peak and burst takes into effect, it will still take time to facilitate downward pressure on shelter and home prices, because there's always a lagging effect between the rise in housing prices and the rise in shelter inflation, okay? So this will take time to develop, but for the next year and a half, essentially, we can now confidently say, I can confidently tell you, we are not going down to 2% CPI inflation anytime soon, okay? It's going to result in a 1.1% change in inflation relative to wherever it would have been had there have been no increase in that shelter inflation component, okay? So it's going to push up the inflation rates by 1.1%, but this is just assuming that if there's zero inflation in any other area, any other index area, we're still going to have a minimum inflation rate of 2% just from these high housing prices. And I can expect that these home prices will continue to go up because inventories are not being replenished at a historical rate enough to justify falling prices. The other thing is that the Biden administration just passed another eviction moratorium. So because they have put a moratorium on eviction rates, guess what? Now people are still occupying houses and rental properties that are not paying for those rental properties and not paying for those houses. They've put, a permanent, or not a permanent, but it's supposed to be a temporary moratorium on those evictions, but it's going to drive those prices up because it reduces the amount of supply of available living units for people to get into. So we're going to see this really harsh squeeze go on into these shelter areas of the economy. In any case, though, I wanted to bring that to your attention because I found that kind of alarming that we're not going back to 2% inflation anytime soon. So, one of the things that I think people were kind of hopeful for, is that these inflation numbers would prove to be temporary, and then, after the backlog of shortages were to work themselves out, and the supply logistic bottle constraints that the Federal Reserve keeps saying that we have worked themselves out, prices would go back down to a normal inflation rate, which is about 2%. That's not going to happen anymore. That is gone. That is gone. It's gone. We're not having that anymore. Looks like that our minimum inflation rate for the next few years at least, minimum, is going to be an annualized rate of 3%. And of course, I've always shown on my CPI projection that based off of just plain old monetary figures, it's more going to be like 4.5% annual inflation, and it could be even higher than that if you factor in that supply bottlenecks and constraints that we're facing now. So I wanted to bring this to your attention. This is a short video. The thing that I'll be going over next, though, and this kind of plays into this, is the rising commodity prices. So I'm doing a little bit of an analysis on charting out those price trends that are going on in the commodities. So the oil index, the soft metals and the hard metals, your precious metals components, and other types of commodities, as well as some of the other stocks that we've been looking at, the stock indices. And I'll give you an idea of where I think things are going using a little known tool, but it's sort of a secret sauce to sort of predict where price movements go during bull markets. So I want you to stay tuned for that, and that I'll cover in my next video. Thank you guys for watching this. If you like the content, make sure you hit that like button on this video, subscribe to my channel, click that notification bell so when I do upload a new video, you'll be the first one to see it and receive it. Comment on the video, let me know what you think about all of this. Does this surprise you or not? Are you scared or not? For me, I know one thing is that, the fact that we're seeing 18% price inflation, I'm wondering where all this shelter inflation is, why it hasn't already hit yet, but it just tends to be that there's this lagging component that goes on, and it tends to be about a year and a half. So based upon that trend, if you look at this back in May 2020, that's when we really started seeing the home price indexes started, charting out a year and a half. It looks to be that we're going to get hit in the next 6 months or so with the start of this rising inflation. Anyway, guys, thank you for watching, and until I talk to you again, I'll see you next time.